In this video, I want to talk about the FVG. That's the FVG. Now, the FVG, which is fair value gap, is a powerful institutional reference point. These are places where banks and powerful institutions place their orders. There are 7 institutional reference points. Okay, but today I want to speak mainly on the fair value gap and as well as the inverse fair value gap. I've been trading with the chart patterns. They are so beautiful and accurate to a very large extent. Well, you know what, guys? The fair value gap is something to trading with SMC, that the smart money concept or the ICT, is a very good one. It's also a powerful strategy, and I've been trading with the SMC for a while now, and I find it um very good as well. So let's get into the explanation part now. The fair value gap is a two candlestick action, just like imbalance, like the drop base drop or the rally base rally. Now let's put one here. We can get anyone here. Okay, now let's start from this now. Okay, these are first candle, good, and these are second candle, and the one at the top. Now this is where the FVG is located. This is where the FVG is located. Okay, this is where the FVG is located. Now remember, it's a three candlestick price action. So again, we have the first candlestick, 1, 2, and 3. Okay, now I want you guys to observe this candle. For the sake of those who might just be coming across this video, so this is why I want to just give a very good explanation of the FVG. Okay, now let's go. Okay, okay. If you look carefully, you would notice that um at the bottom, that the first candle, hmm, this is the first candle. This is where the candle started. This is where it's closed. Okay. Now for the second candle opened at this point, closed at this point. Why the third candle opened at this level and closed at this level? The FVG lies between the wick of this first candle here and the bottom of the third candle. So this is the fair value gap lies. Okay. But now we use it in conjunction with other confluences, to make our trading entries powerful. Okay, now let me take out these numbers here. Now if you pay attention to um the fair value gap here. Okay, let me judge again. This one here, we can clearly see that when the price traded back into the fair value gap, you can see the movement here, and indeed it is a very powerful movement. Now there's what they call these are the basics. We call it BOS, and yeah, what we call the MSS. I was taking us through those terms, the VOS and the MSS. For some persons, they we just call it the change of character. The BOS stands for break of structure, while the MSS stands for shift in market structure. Okay, let me give us an illustration of a break of structure. Don't worry, I'll get back to this explanation. I just needed to explain this so that we have a good understanding. Now we see the market in a up trend formation. Um, okay, see the market in an uptrend formation. The first move, the price comes back, moves upward, come back, moves upward, and again and again. Now, looking at this, we can correctly say that the market is an uptrend. Now, this level here, the market is making higher highs. So every time it breaks this structure and is moving upward, something like this, it is referred to as break of structure. So at this level, we can see that the market is seeing a very very powerful uptrend because is still moving upward. But in a situation whereby let's say okay, whereby the markets make a move like something like such as this, it went push downwards, breaking the recent low, went upwards, went downward again. Now we call these parts change of character, or we can call it shift in market structure or market structure shifts. That's why we have the MSS here. Now, we can say at this junction that the market has shifted structure to a set structure, and this kind of um market formation is called we call it the breaker block. The breaker block. First of all, the market speaks liquidity, the buy side liquidity. After taking liquidity, it pushes downward, just to take out the early buyers. Okay, now remember when the market continue moving forward, upward and on, we call this break of structure. By the time the most recent low is broken, we call this market shift. Shift in market structure or market structure shift. Okay, now back to this video here. Now, um, we can see that this fair value gap, it is unmitigated. When we say unmitigated, we are simply saying that it has not been tested before. It's still fresh. So because it's still very much fresh, when the price came for the initial reaction, you can see the movement. As far price did not close below the fair value gap, it's still valid. So when the price came to this point here, okay, to this point, this level, then it did a little bit of movement here around this level, just a little bit of movement, and then it pushed upwards. Now, if you look at this place carefully, you might ask what happened. What was the reason for all this? Well, what happened here was that the market had to take out the early buyers here because some persons would play their stop loss just below this level, but the market had to just take out the liquidity from the downside, and the movement upward was a very very powerful one. Now, I'll just speak a little on two type of entry before I cut the video. Now we have the aggressive entry and the conservative entry. Now if we are using the conservative entry, which I use usually, that's what I usually use. It's an entry that is based more on confirmation signs. Okay, at this level, we have a break of structure. As far there is a solid close, the price closed above this high, and it closed above. It is a valid break of structure. But if it was a week, we cannot consider that the break is valid. Okay, so because the break of structure that occurred was a solid was a they call it body, so it is considered good. So whenever this occurs, you want to wait for a pullback. That's what I do. I didn't just enter. I'll wait for my pullback to this level here. For this level. Okay. For this level. Now, if if you are working with supply and demand, we can see that this is a bullish engulfing candle. Good. Okay. And if you are working as well with the SMC, um we have a mitigation block here as well. Sorry, sorry. Okay. Now, okay. Yeah, it's fine. We have a mitigation block here as well. So I'll give the explanation of that as well. Okay. So when the price came out for this level, that was when the price just went upward. And as if we have a very small, very tiny fair value gap here. Very tiny. Very small fair value gap. You see, and in fact, this is another block as well. And I've come to understand that the other block works perfectly well when it is in conjunction with the fair value gap. That's the most valid, the most strongest other block. When it is used in conjunction with the fair value gap. Okay, guys, I would be giving us more videos, so please just stick around, and I'm sure that you will learn a lot. Thank you very much.